AI's explosive growth fueled the 2024 market rally, generating significant returns for both leading companies and investors. Beyond Wall Street, the technology is rapidly transforming daily life, with AI driven solutions becoming increasingly integrated into consumer products and services. While these AI innovations are expected to play a dominant role in the tech economy, futurists like Amy Webb predict that the coming year will bring even more sophisticated technologies that will push the boundaries of what we know to be possible. And joining me to talk about those emerging trends is the renowned futurist, Amy Webb, founder and CEO of the Future Today Strategy Group. And Amy, it's great to have you here. It seems like this is an annual tradition now at this point. But talk to me about what you're seeing in this current AI moment. You've said we're entering this technology supercycle. So what does that mean, and what are you seeing out there?
Thanks again for having me back for this annual chat, which I certainly enjoy. So about 18 months, our analysis showed that we had entered the beginning of what we were calling a technology supercycle. So in traditional economics, a supercycle just describes a period of extended growth and productivity, usually due to an inflection point, like a technology or something hitting critical mass or some other big event that leads to a sustained period of growth. Historically, when this has happened in the past, it's been the result of a single new general purpose technology. So the steam engine is an example of that. The internet is an example. And now we're talking about artificial intelligence. So this is why also you're hearing comparisons between the steam engine and AI. The thing is, artificial intelligence is not the only emerging general purpose technology that's causing this uptick in activity. There are actually two others. Artificial intelligence serves as the foundation. The other two are advanced sensors and biotechnology. And I know they don't seem related, but in practical terms, advancements in one area lead to advancements in the other, which creates this flywheel effect, which is why we are now clearly in this super cycle pattern.
And what are the bigger trends or convergences then are you seeing unfolding around this technology, or what do you see this really all leading to?
Well, I think the easiest place to see advancements that are at least in public have to do with drug discovery and medical devices and wearables and things like that. So we now have GLP-1 drugs out in the marketplace. So that's your Ozempic style drugs that are helping people with weight loss. That wasn't an accident. That was the result of modeling, and the modeling was done with the help of AI. We have the first candidates for vaccines that can help address cancer that are coming out. So we're starting to see enormous changes in the life sciences space alone, which is that convergence between AI and biotech. And of course, I'm sure everybody who is paying attention to this show also is very aware of what's happening with NVIDIA, which has made a ton of announcements about robotics. So that's another convergence that's the result of advanced sensors and AI that we are going to start seeing in the marketplace soon.
And I want to ask you about that, but it seems like really you're pointing out this key theme of like really living intelligence. And can you talk about like what this means for investors in terms of growth areas to watch?
Well, look, there's a lot to watch, but I think the key for investors right now is patience. And I know that is always a problem. But I've spent quite a bit of time with both analysts and some investors over the past couple of weeks. And, it's like everybody has forgotten that there are other quarters besides the one that we're currently in. And the problem with that is if you continue to make decisions based on what you know today, and I know this is tough, without connecting that to what's coming, that means you're going to sell early, or if you're an analyst, you're going to recommend holding or selling, and you're eventually going to lose in the longer term. And I'll give you a great quick story. So this would have been a couple of months ago. I happened to be at a lunch with some investors, and the NVIDIA DeepSeek news broke. So DeepSeek, as you're aware, is a Chinese upstart that effectively cloned existing large language model technology to make their own. But the headline was, they did it faster, they did it cheaper, and therefore this whole thing about chips is sort of null and void. Well, so that's actually not true. There's one thing to clone a service and to basically replicate it, make it so that others can use for faster, for cheaper, for less energy. But that answers yesterday's problem. It doesn't address the innovations of tomorrow. So all of the investors kind of freaked out and they were asking me in quick succession, what do we do? Do we sell NVIDIA? What do you recommend? And I told them, don't be ridiculous. First of all, you don't understand the contours of this announcement. And by the way, what's news, breaking news for AI right now is going to be old news like 5 minutes from now. That's the nature of the cycle that we're in. So there's a lot of like leading with emotion when it comes to these technologies. And to be fair, they're hard to understand, but you have to be willing to be patient and take a longer view. And I just don't see that happening. I see these attention spans shrinking at an unprecedented rate, unlike anything that I've seen before, which I think is a huge mistake.
And you mentioned NVIDIA, and we've seen robots become a real central growth story for them and companies like Tesla. So why is everyone talking about robots now?
Yeah. Why right now? Especially when you consider that in 1928, there was a somewhat walking, talking robot named Eric. And robots, it seems like every decade after that, leading up to 2013, when Boston Dynamics released its first anthropomorphized walking, talking robot. So every time this has happened, there's been this big proclamation, this is the era of robotics, and it's never materialized. Here's what's different this time around. The reason that robots haven't been able to fully scale is because they didn't have enough real-time data to ingest. And quite frankly, the compute wasn't there yet to help them learn in real time. It's one thing for a humanoid robot to mimic our movements as we gesticulate, walk around in a contained environment. When you put a robot out into a world that they haven't explored before, that's where things become super, super tricky. So the bottom line is there is now enough compute. The AI systems have come a long enough way, and it will be possible to deploy, again, not super advanced, but early stages robotics outside of a manufacturing warehouse that can finally start to do something. And the more data that get ingested, the more that these systems learn, the more chipsets and hardware that will be specifically designed for robotics, along with AI systems and sensors, the more that we will start to see these actually start to come to fruition, which I think now is why you are finally hearing everybody talk about this. And in this particular case, I don't think it's just smoke and mirrors. So Tesla, I'm not as excited about, but NVIDIA, I would 100% watch.
And in terms of these areas, what do you see as potential bottlenecks to taking steps forward?
Well, again, so when it comes to all of these technologies, the technological advancements on their own aren't useful without a robust supply chain and also people and a economy that is has some certainty to it. You sort of need these other levers pulled in the right direction. One of the challenges that we are seeing at this particular moment in time is that the trade war launched by the current administration isn't quite panning out, I think, the way that they intended. And the result of that are unintended consequences, such as not being able to get tiny components that you would need to go into these brand new systems that promise all of this innovation. When we talk about chipsets, there's thousands and multiple thousands of chips that are required, not like a single one, not to mention transistors and other components. So the more tenuous and brittle our supply chains become, the more this means that regardless of how far the tech comes, they're not going to be able to scale. So again, if I'm an investor, I obviously want to pay attention to some of these macro themes, as well as the technology that's being developed, and try to keep, now is the time to steady yourselves because it's going to be a challenging 12 months to figure out what to pay attention to.
And we've also seen things like quantum computing, and obviously a lot of these companies are trying to invest in nuclear. I think energy is like a big question around this. So, what other technologies do you see out there on the frontier that maybe seem far away, but not as far as we think?
So this is another area. So both nuclear and quantum, these are areas that at FTSG we have been talking to our clients about for a long time, but they've been sort of categorized as what we would consider monitor. So in our world, we have three categories: act, decide, and monitor. Monitor are those areas that are important enough that we want them to sort of keep on their radar, but they don't rise to the level of make a decision about it or act. We are upgrading at the moment quantum to, um, you know, start to make some decisions. Now, this does not mean that quantum computers are off the shelf and you can go buy one at your local Best Buy. And it also doesn't mean that quantum encryption is around the corner and, cybersecurity is dead. What it does mean is that we're very likely looking at a future where there is no longer just one type of computer. And for the enterprise, what that means is lots of optionality in how, work gets done. So we've got classical computers, we have quantum computers, which allow for hundreds of millions or billions of simulations using enormous amounts of data to happen, very, very fast, if not instantaneous. So in the financial fields, financial services, insurance, life sciences, these are areas that will see dramatic improvements as quantum computing starts to mature. But this is a long horizon technology, which is why we've been advising our clients that are in insurance and financial services and life sciences. Now is a good time to start making some decisions. And folks in other areas that we work, like auto manufacturing or other areas, continue to monitor. On the nuclear side of things, again, I go back to this NVIDIA announcement where everybody suddenly decided that the compute resources weren't what they thought they were going to be. And therefore, our traditional way of producing energy is fine. That's probably not the case because, again, you have to sort of connect the dots and think beyond just the AI that you know today. So for that reason, I think the small modular nuclear reactors are still very interesting. I don't see anybody divesting from them. They take about 7 years to come online in this country, so in the United States. And we're starting to see a new push in Europe, which is very unusual. So again, that's another place that we have some of our clients paying more attention to, but it hasn't risen to the level of like ACT right now.
It's hard to tell how this technology is going to be applied and how this is going to evolve. But one of your concerns has been this leading with emotion, or maybe business leaders aren't making the most well thought out long-term decisions. And as you know, investors like to have a certain amount of certainty around these things. But what is your main takeaway then for investors right now, and how to best navigate these clusters of trends in uncertain times?
I think you need to check your assumptions at the door. So again, I've been past quarter, I've been in too many meetings, closed door, public, with investors where folks on the buy side and sell side have been asking questions in meetings, or with institutional investors, family offices, and people are getting caught up on the wrong things. And the wrong things are, generative AI can do this, it can't do that. People are throwing around terms, complicated technical terms when it comes to artificial intelligence, and hyper fixated on that, and hyper fixated on the immediate costs without being willing to go a little bit further out to see how this might, can we build a model to see how this improves productivity, profitability, margins, things like that over time. I'm just seeing wild speculation. And it doesn't take, Warren Buffett to tell you wild speculation is not going to deliver you success in the long term. So I know this is a difficult pill to swallow, but patience is going to get you a very long way. Artificial intelligence is important to pay attention to, but you have to take a much wider viewpoint. It's highly technical. If you're not a highly technical person, phone a friend, get some research that is not backed by a venture company, get real research. And don't forget to pay attention to the rest of the technology supercycle. You have to start looking at the convergences between AI and advanced sensors and biotechnology today, because I can guarantee you a few years from now, there's going to be a fourth general purpose technology added in, and that's quantum.
Well, Amy, thank you so much for your insights today. It's always great to talk to you about this, and we're really glad you made the time for us.
Likewise, thank you so much.